Hello and welcome to FinextraTV. I'm Hannah Wallace, and joining us in our virtual studio now is the CEO of NGDATA, Doug Gross. So welcome, Doug. It's lovely to have you on again.
Welcome, Hannah. Although, given the current situation and what we're talking about, I think the fact we're across the ocean, it underscores the topic of the conversation.
I know it does. Last time we were face to face in the studio, but it's good to have you on virtually nonetheless, because yes, as you say, 2020 has been an extraordinary year, full of big changes, and that's really where I want to start the interview, looking at how some of the bank's priorities might have shifted this year, especially as we enter into 2021. So let's start there. What do you think the priorities are these days for banks?
Well, as we're doing, we've adopted to what some people call the new normal. Banks also are now thinking about the new normal in terms of bank distribution. And it really comes down to traditionally 60% of banks' expenses have been associated with the cost of maintaining that branch network because people like going to the branch traffic, while also putting in place a new digital engagement that we've seen come over the years. But 50% studies are showing 50% of that bank's digital investment to date has really not paid dividends properly during this test run of the new normal we're in. And so I think the current toolbox for optimizing this branch network and setting up some omni-channel strategy is proving to be outdated in financial services. And that's a priority that needs to be looked at.
And what about real time? We've been hearing a lot of discussion around real time and how this has come to sort of the top of the priority list. Would you say that's the case? And if so, tell us a bit about why.
It is. Real time is used in financial services for real time payments, real time engagement. So when you say real time, I think what really is meant is the fact that I am now engaging with you as my banker in a manner that is not face-to-face, not personal, and it's at my convenience. So if I'm online and I've had an impact from COVID and I need to look at maybe missing my mortgage payment, my situation's changed, that financial institution needs to know that right now at 8 o'clock at night, not 8 o'clock tomorrow morning, because I have the need now, I have the time, the bandwidth. If the financial institution can't get to me and see what's going on in my life in real time, then they're going to miss the ability to help me. And this whole empathetic view is not just platitude, it's real now. People are facing tough situations, and their banks are critical to the society and people's ability to get through this.
And of course, we've heard again and again, especially this year, about the importance between the bank and their customers. But what I'd love to hear from you is what you think is needed to build these valuable relationships between the bank and the customer.
Well, the actual fact of the matter is that financial institutions need to interact with their clients in an engaging and personalized manner. And to do that, you have to rethink and think carefully about the data that you have access to and how you actually use that. Because if you get it wrong, the price of getting that wrong in personalization is quite high. In fact, in 2019, Gartner did a survey of 2,500 customers, and 50% reported that they've unsubscribed to their financial institution because they felt as if the financial institution was not engaging with them in a digital manner that met their needs. And it's not just meeting the needs, it's also striking a balance between what is privacy and relevant and not getting to the creepy side of it. I need to know a lot about my client because I'm a good steward of their personal assets, but I don't need to go to the point of being creepy and misusing that information. So people want to be treated as an individual, and they want to be treated with respect and in a relevant manner by their financial institutions who have a higher standard than a retailer, for example.
Sure, sure. So could you talk us through this so-called Customer 360? What are some of the benefits we're seeing here, and also what challenges are we talking about?
By Customer 360, we think that's mandatory to underpinning these relevant relationships. And what you have to do is be able to get enough data from your internal sources, of which financial institutions have a lot, as well as external unstructured sources, because I need to know what someone is doing, not because I'm trying to infringe on their privacy, but because that's the only way I can serve them in the right way. So if I take what their behaviors are from different inputs and I marry that with my existing data, then I can come up with where you are in your life and predict what things you are facing. The challenge for banks is that they've been organized in product silos. So I have my mortgage silo, my credit card silo, my auto loan silo. And what we're helping banks do is get through that product silo, which I'm making it simplistic. It's not that easy when someone is massive and they've been organized and maybe incentivized that way. But in order to get that right customer journey, you have to get through that, and you have to bring in other external data as well.
Sure, sure. So, I mean, of course, there's not one size that fits all, is there? So that sort of brings us to the idea of relevancy and also a bit about convenience. Could you talk to us a bit more about that?
Yes. So to be relevant, I have to meet you at the time you need for the experience that you're facing. I talked before about someone who might need to skip their mortgage payment or a credit card payment. The financial institution, and we're working with some partners now who serve financial institutions, some of the largest core processors in the world. And these guys, there's one in the United States, and they have a whole program called Ethos Engage. And in that, they are equipping the tier 2 and tier 3 financial institutions who might not have the assets at their disposal that some of the top 50 financial institutions do. But they need to be sort of the George Baileys in It's a Wonderful Life. The local people always had that relationship. They just did it because they knew you. They would see you on the street. You'd come into the shop. And we're trying to replicate that in a digital manner so the smaller financial institutions are equipped and served so they can serve their clients. It's sort of that mantra that it needs to be.
Well, I certainly like your comparison there as well,
Yes.
Doug. So, of course, so you've rightly highlighted some of the big challenges along the way and that stand within that journey. So how are banks moving across the path of becoming customer-centric with data? And then after that, we'll move on to a bit more about what 2021 holds for us.
Well, so banks are, first off, you have to understand the issue is there. Physical branches are always going to play a pivotal role in financial institutions. Studies are showing that people still feel more comfortable opening a mortgage or doing their retirement planning in person. Now, the world we're facing, you and I are doing this via Zoom. People are originating some of these products or services via Zoom, but that's going to change. It'll go back not to as much in person or all digital, or sort of be in the middle of this hybrid. And a lot of experiences are going that way. But digital banking behaviors are showing that people now, and there was a recent study done in June by Simon Kucher, and over 78% of people are saying they will always open their accounts digitally now. So banks are looking at customer behaviors, preferences, taking all this this into account as they look at their best-in-class digital experience going forward. And we have 100% of our clients and prospects discussing different digital strategies starting in 2021. It's not an option anymore to say, well, we have an omni-channel or virtual wallet. That's not good enough. People are not going to stay with them and need a different type of service. So that whole strategy and strategic aspect for NGDATA, just talking about us for a second, it's been a tailwind. We've taken our employees and our customers' safety first and foremost, and done everything to protect that. But from a business perspective, the expectations clients have on their financial service providers is much higher, and banks are responding. Those who don't are not going to make it.
Some interesting insights there, and it's good that you've certainly painted the picture for us then. So that kind of leads me into my last question, the crystal ball question, as it were. How do you see this space developing, sort of going into 2021, and how do you think banks and their customers will be navigating the coming months?
Well, that's a really good question, because we're looking. We get asked now a lot. So what are the top 3 things you can recommend to us? What are the 5 things we should be doing? Everyone wants a playbook, and I think banks and other financial institutions need to understand that there's an art aspect to this and a science aspect to it. So we've published white papers, and people can go to our website and look at sort of we have one beyond the branch, how you build these digital customer relationships in financial services. That'll give you the information from studies, what we're seeing as best practices. And that's the science part of it. The art part is that we're all people and we all need a different relationship. So just because we're all in the same client segment that banks might put us in does not mean we have the same needs and services. We're at different points in our life. We have different things happening. We've been impacted in a different manner. So that customer engagement, that science or art part of it, we can't underscore enough that banks need to focus on that as much as what are the top 3 things I should do. I wish it was that easy. It's not. But we advise people on both of those. And part of the reason we're doing this session today is to try and motivate people to think about these things in a different way. Finextra is good at sponsoring these. We're trying to get the message out and support the industry. Just as sort of a last comment, there was a McKinsey study that for banks and financial service providers, they claim that there's $1 billion in untapped value for them. So if they want to think about it selfishly for a minute, there's $1 billion in untapped value by getting this right. And people are expecting it, and leaders will get it right. So we encourage people to think about this in the new way going forward.
Sure. Some very good advice there as well, Doug. And I think that's where the power of data comes into play as well. But look, we'll leave it there for now. As I said, I'm sorry we couldn't be face-to-face in the studio, and I hope further down the line we'll get another chance to catch up.
Maybe next year.
Yes, indeed. But thank you so much for calling into our virtual studio this time, and it's been a pleasure hearing your insights.
All right. Thanks, Hannah.
Thank you.